This is Bloomberg Markets. I'm John Ehrlichman. Canadian shoppers may be starting to pull back on spending as inflation erodes their purchasing power. An advanced estimate of retail sales for July, released today, showed sales declined 2% in the month. If those early estimates hold, it would be the first monthly decline in 7 months. TD Bank's economics team just did a deep dive into this issue, finding the biggest squeeze in this country is with middle-income Canadians. Rannella Billy-Ochieng is a senior economist with TD and joins us now. Thanks very much for your time. Appreciate it.
Thanks for having me.
So I guess just to break things down, you talk about middle-income Canadians. What income bracket does that represent?
So basically, that represents those who earn typically in the ballpark of roughly 66% after tax income. So basically, these are persons who are reflective of those within the 40 to 60% income bracket.
And I guess there are all different inflationary effects, but it's various inputs, just part of daily life that impact that group more so than perhaps others?
So that's the thing. So to really get at their inflationary reading, we have to really look at their lifestyle practices, so their propensity to spend on certain goods. And one of the things that we actually found was that they're more prone to spend on transportation and food combined. And if you look at the inflation print for July, actually, that's where we are actually seeing the largest price pressures, because food inflation was up above 9% in the month. And when you look at gas prices, despite the fact that they pulled back a bit in the month, they were still up 35% year over year. And because of these large price swings, middle-income households they're actually facing higher inflation rates.
And Rannella, we talked about that early read from Stats Canada on retail sales in July. There are clearly now some signs if people have to spend more in certain areas of their daily life, they might be stretched on spending elsewhere. Does it surprise you to see that early estimate pointing to the first down month of retail sales in, I guess, 7 months?
Not necessarily, actually. The Bank of Canada survey actually showed that low-income and middle-income households, a large percentage of them, more than 50% of them actually plans to trim spending in the coming years. So we were expecting the retail sales momentum to fade as we move further away from the reopening, and that's playing out exactly as expected. I think for us, it's easy to see why that's happening in July, because we saw that gas prices actually pulled back a lot in the month. And if you look underneath the hood for the print for June, that was largely a higher gas price story. So it's not necessarily something that we were taken off by.
It is a complicated time because we spend so much time right now talking about higher interest rates and the impact on Canadians from that. And yet at a time when central banks, including our own, are consistently telling us that rates are going up, this inflation fight is a reminder of that. I mean, what you found in your report is a reminder of that inflation fight.
So that's the thing. The inflation fight is not something that's going to happen. It's going to be over overnight, and we are mindful of that. And I think, most consumers or their psychology is slowly adapting to that rationale. I think the important thing to look at is that there's still tentative signs that things are easing. When you look at wheat prices traded globally, they have come down from their recent highs. When we look at energy prices as well, those are coming down. So things are trending in the right direction. I think for consumers and those who are able to, I think one of the things we do expect to see, and that's what we pointed to in our report, is that we'll see some consumers look at their discretionary spending and perhaps take a second look. And those that are able to might be reshuffling their spending, and some others might actually trim back. So that's something to keep an eye on in the coming months.
Rannella, we have talked so much about how higher interest rates have impacted the story of housing affordability, what it means for things like mortgage rates. But in your work, you've also looked just generally at shelter costs. One of the inflation realities we are seeing right now is in the rental market. Can you walk us through what that data tells you?
Yeah, so over the course of the pandemic, it's no surprise that many homeowners, they doubled down. They spent a lot of time renovating, taking care of the homes. And we saw a surge in home prices because the demand for space was very strong. A lot of people wanted to move away from city centers and find their little space. So that put a lot of pressure on home prices, and that showed up in own accommodation CPI. But one of the things that we're seeing in recent months is that rental markets inflation is actually pricking up. And rental markets generally affect lower income households, and that's something that we'll have to keep a close eye on as rent goes up. We'll have to look at the concept of rental affordability. That was an issue even before the pandemic, and it's going to highlight vulnerabilities, particularly within the low income households. So definitely something to keep an eye on.
Before I let you go, just how tricky is this dance going to be for our central bank? We're watching interest rates go up. I don't want to say unprecedented, but this is quite dramatic. It's not unique to Canada, but the inflation fight is not over today. But as these rates go up, they sometimes have that lag effect. And obviously, everybody's trying to figure out where the economy is going to be, let's say, a year from now. What are you thinking about on that front?
So we are mindful that it's not going to be an easy exercise for the central bank to really contain inflation, but they have reiterated on many occasions that they are committed to the task. And one of the things that we always try to keep an eye on is really that construct of inflation expectations. At the end of the day, it really matters what the average consumer expects inflation to be. And that's something that's really going to make the central bank's job a lot easier if consumers have confidence in their ability to contain inflation, then they would act accordingly. So it's not going to be an easy exercise, but it's definitely something that we think the Bank of Canada is committed to do, and it's definitely something that we'll keep an eye on.